For Americans worried about their jobs and retirement savings, the news today was not reassuring. The country's biggest bank, Bank of America, went public with plans to cut 30,000 jobs. And new fears that Greece might default ignited an early sell-off on Wall Street, where the Dow had already lost 13% over the past 7 weeks. The Dow was down as much as 167 points today. It rallied to close up more than 68 points. But it's a sign this could be another volatile week for your money, which is Anthony Mason's beat.
Scott, Europe's debt crisis just won't go away, and fears are growing that it could take the global banking system and the U.S. economy down with it.
European stocks tumbled nearly 4% overnight as a new wave of worry swept through the market.
Europe is going through their Lehman Brothers 2008 style moment.
The failure of Lehman Brothers here in 2008 caused a seizure in the global financial system. This time it's Europe's financial giants that are confronting the bad loans on their books. The ratings agency Moody's reportedly is ready to downgrade France's 3 biggest banks because of their extensive holdings of Greek debt.
There's a real risk that the European banking sector, or certain parts of it, are going to go bankrupt.
Analyst Dan Greenhouse says investors are worried about contagion. Greece has been flirting with default for months, but Portugal, Ireland, Spain, and Italy are also deeply in debt.
And so if Greece defaults, if Portugal defaults, if heaven forbid, Italy or Spain were to default, the ramifications throughout the region would be enormous.
And beyond, the U.S. banking system would also feel the tremors, says economist Mark Zandi.
Our own banks are very well capitalized. They are very profitable. They're doing quite well, but they can't withstand a big problem out of the European banking system. Our banking system is tethered at the hip with Europe's.
Here's just how tightly tethered. American banks have nearly $700 billion in direct exposure to European banks. They also have nearly $200 billion in exposure to the debt of Greece, Portugal, and Ireland.
Anthony, is the problem a matter of uncertainty, that the banks don't know who owns what?
That's precisely the concern here, Scott, that no one's really sure who's exposed where and just how much. If you'll recall back in 2008, it was that very problem that led to a freezing of the whole credit markets. Banks wouldn't even lend to each other. They became so scared.
Anthony, thank you.